Hey everyone, welcome back to 8 Minute Finance, where we break down money, crypto, and investing into simple, fun, and relatable explanations. You're probably expecting my dad, Ted, right? Well, surprise! I'm Aleena, his daughter. Apparently, Dad thought it'd be cool for me to take over this video because, in his words, people need to hear this from someone who can explain it without sounding like an old man. Thanks, Dad. We're doing a whole stock series playlist together. Dad handles the serious grown-up investor side, and I'm here to make sure even teens like me get it. Because if you start learning about money now, you're basically giving yourself a cheat code for life. In the last video, Dad explained what stocks are, how they're like owning slices of a company. But here's the question I had. Okay, cool. I own a slice. When do I get paid for it? That's where dividends come in. Dividends are money certain companies give you just for holding their stock. You don't have to sell anything. You don't have to clock in and work for them. You just get paid for being part of the team. Think of it like this. You're in a group project, but instead of doing extra work, you still get a piece of the reward. And unlike most group projects in school, you don't end up carrying the lazy people. Some investors build their whole strategy around dividends because it's a way to get passive income. Money that comes in while you're busy doing literally anything else. And if you reinvest those dividends instead of spending them, that's when your money really starts multiplying. Let's break it down. Okay, so dividends, here's the quick version. You own part of a company. That company makes money. Sometimes they give you a piece of that money. That piece? That's a dividend. Now, not every company does this. Some are like, nah, we're keeping all the money to grow bigger. Think of a pizza shop that uses profits to buy a bigger oven instead of handing out free pizza. That's called reinvesting. But other companies are like, we're good. Here's some of the extra cash. That's your dividend. How often? Usually every 3 months. Some do it monthly, some once a year. The company's board decides the amount. You don't get to vote on that, unless you're some billionaire with a ton of shares. Important thing, you have to own the stock before a special date called the ex-dividend date. Miss it and you get nothing. Also, dividends aren't forever. Companies can raise them, keep them the same, or cut them. A cut usually means bad news. Stock prices can drop right after. People check 2 things: dividend yield, your payout compared to stock price. Payout ratio, how much of their profits they're giving away. Here's the danger. A high yield can be a trap. If they're giving away too much, they might run out of cash. So yeah, dividends are awesome if they're steady. But if the company's struggling, that free money can vanish. Think about it this way. Dividends are kind of like rent. If you own a small apartment and someone rents it, you collect a payment every month without doing extra work. Stocks with dividends are the same idea, except the tenant is the company paying you. The more apartments you own, the more rent you collect. Same with stocks. The more shares you own, the more dividends flow in, turning your portfolio into a steady income machine. All right, here's where dividends get fun, and honestly kind of addictive. They might look small now, but over time they can snowball into serious, life-changing cash. Let's start with a few well-known dividend payers. Right now, Coca-Cola trades around $69.92 a share and pays $2.04 annually. That's a 2.92% yield, basically a mini ATM dropping money into your account just for owning it. Procter & Gamble, the company behind Tide, Gillette, Pampers, is about $153.74 a share, paying $4.23 annually, which is a 2.75% yield. This one's been paying dividends for over 130 years, and they've increased the payout for 67 years straight. That's older than my dad. Johnson & Johnson is another big one, currently about $160.28 per share, paying $4.96 a year, a 3.09% yield. They've been paying and increasing dividends for over 60 years. Then you've got PepsiCo, around $175.84, paying $5.42 annually, 3.08% yield. Imagine drinking a Pepsi and getting paid for it. I've got to say this, I'm not a financial advisor. I'm not telling you to buy these stocks. I'm just showing you examples so you can see what's possible with companies people actually know and trust. Here's the magic. Reinvest the dividends. Let's say you put $100 a month into dividend stocks. Every payout you get is used to buy more shares. More shares mean more dividends. More dividends buy more shares. And that loop never stops. Over 10, 20, even 30 years, that snowball gets massive. What starts as a couple of free bucks here and there can turn into hundreds or thousands of dollars a year, all without selling a single share. And the easiest way to start? I've dropped my referral link in the description for a stock app I actually use. Sign up, get a free stock, no deposit needed. Even if it's just one share, it's your first money tree. Dividends can be small now, but turn into real income with consistency, reinvestment, and time. Whether it's Coca-Cola, Procter and Gamble, Johnson & Johnson, or Pepsi, the key is starting, even tiny amounts, and letting the snowball roll. Here's another fun one, McDonald's. You know, the place famous for Big Macs and fries? They also happen to be a global dividend giant. The stock trades around $280 and they pay about $6.68 annually per share, a yield close to 2.4%. That means every time you or millions of others grab a burger, some of that profit ends up back in shareholders' pockets. Pretty cool, right? It shows how everyday brands can quietly pay you for life. Here's the bottom line. Dividends aren't some secret handshake on Wall Street. They're for anyone who wants their money to work while life happens. Even small investments add up. Think of it like rolling a snowball. The longer it rolls, the bigger it gets. And before you know it, that snowball is making money for you. Now here's something we can celebrate together. If you've ever received a dividend, drop the amount in the comments. Doesn't matter if it was just 5 cents or 50 bucks. Let's cheer even the small wins. And if you enjoyed this breakdown, go ahead and hit like, tap subscribe, and ring the bell so you don't miss the next one. Because we're diving into ETFs, the perfect buddy system for dividend investing. Oh, and my dad always jokes that I'm building my own paycheck by learning this now, and he's not wrong. This is 8 Minute Finance. I'm Aleena, and here we make money make sense. See you in the next one.